Okay, guys, welcome to another video of my YouTube channel, and this is going to be one of the amazing videos we're going to be having because we're going to be talking about the most notorious. I don't know how I use that name, but I'm going to talk about the most notorious trend reversals. I think everybody hate that shit. I believe so. Everybody hate that shit when you're thinking the market is an uptrend, and all of a sudden the market spins down to a downtrend. So I guess everybody wants to be able to be like know when the market is gonna try to switch trend to whether from an up to a downtrend or from a down to an uptrend. All right, because me, why I started trading, I always dealt with that shit too, and I didn't like it. The market is a downtrend, and all of a sudden, dang, stop loss, change ranges from an uptrend. I looked at it as to a downtrend instantly. I'm like, what the fuck? What's happening? So I've discovered how to spot out trend reversals, and trust me guys, they really truly work very well and most of the times. Okay guys, first thing first, before I go into the video, I'd like you guys to like and subscribe to my channel, and also comment so I can know things you would like me to teach about and talk about. So first thing, like and subscribe is going to do the channel good and also do me good in pushing out there for people to see more. And because YouTube is gonna, that's how the algorithm works. They're gonna push you more out there because people want to learn it more or people want to see it more. So I think that's a good idea for this forex space. I hope you guys can. So just do your due diligence and like and subscribe. All right, let's go down to the video. I'm just gonna write. I like to write and teach. So I'm gonna write down the topic we're gonna be learning for today, which is gonna be how to spot trend reversals. All right. I'm going to teach you guys how to spot trend reversals. Let's write it there. So, trend reversals. Good, good. Guys, one. I think we're just going to make the font big. I say, good. This is enough. So, guys, we all know that very bad tide of trading whereby you think the trend is going to be. Beside this is the US dollar currency index. I'm using it as because it best showed an example of trend reversals. Mind you guys, everything you hear from your forex gurus, me and I, it's experience that can make you spot them without them being like so much perfect. All right, because sometimes when I teach you guys something here or your gurus teach you guys something, you go like you try to see it's perfectly formed like that. You don't really they don't always perfectly form that way, but with experience and time with charts, you get me, you tend to start seeing some things even though they don't give you exactly how it's textbook example. You kind of like know, okay, this is what is happening here. Like let's say this area here now, we can see a double top there, but remember double top, they'll give you a double top that's so perfect that it touches here and here, but this is also a double top. You can see market formed it and push right down. All right, it's also a double top. So guys, let's go into the video and I'll teach you guys very, very well about the trend reversals. I think in subsequent times, if you keep on watching and my videos, you will learn to see how I can spot even the ones that are not as perfect as the textbook or your gurus is going to tell you. Because that's what I also suffer from. Like, I'm going to show you like this when you come, but it's not looking like that. But you have to just know that it doesn't always need to always look so perfect. You just have to be able to spot them whilst they are forming because that's when you can capitalize on it. And they don't need to aspect the budget chart is not a perfect place, all right? It's not a perfect place. Sometimes they appear very perfect. All right, let me show you one I saw recently that was so perfect. It like a setup that was so perfect, and I capitalized on it last week. Nasdaq, that's 100. Okay, I think we're gonna use which one? Just FXCM Nasdaq. All right, this was so perfect that I was like, dang, this is cool. So I actually predicted the rise of Nasdaq to this zone here because you can see it here. You can see the one it's a trend line. You can see that the trend line hits the Fibonacci level zone. double top, double bottom, sorry, at a key level. Let me draw the key level for you guys. At a key level, 3 conferences. So I knew this was the no-brainer. And the Nasdaq is going to rise on the weekly time frame. Remember, the weekly time frame is very powerful. Seeing this kind of thing on the weekly time frame was like, damn. Fibonacci 1, support a previous resistance that turns support. You can see the rejection. As first one, it's an uptrend. That's the first conference. Second conference that is in a key level, which is a resistance turning to a support. Third one, Fibonacci 50 level, 50% Fibonacci. Remember, and lastly, you can see the rejection, and fourthly, you can see, thirdly and fourthly, you can see this double bottom on the key level. So definitely we knew this one will reach here. So I just want to show you, this is kind of ones you see on the textbook. They just want to snap it and show you guys on the textbook, but it doesn't always appear like this. But this one is a very perfect example. So guys, let's go back to our previous. First, let me just do away with this. Move these drawings and just gonna DXY. And I think this is where we were. Cool. Yeah, cool. So guys, trend reversals. So trend reversals is simply what it means when the trend is changing and how to spot them. This video is going to actually be very short because it's actually easy to spot. So we can see, let's first put our, draw our level, just block some levels so we can see a nice chart that we are trading. So this is actually the US dollar index. Cool, and clone. Just gonna keep it here and clone again. Just key levels, alright. Remember guys, the most obvious ones is what you're spotting. So you can see that there. Cool. I think you just need to adjust this a little. Yeah, I think this will be much better because it touches 1, 2, 3 at least. I'm gonna read this one because I remember that it's not really perfect. Alright, now so you guys might be wondering, well, it doesn't touch it. How do you want it to touch? You can see that it touched 1, 2, 3, 4. That is enough to know that okay, that is the key level. This one probably may be there was some sort of news on the Friday that ended it this way. I bet you it was news that probably made it end in this manner. Alright, and then next time closed up because definitely this one is supposed to push back down. So guys, let's get it. So excited. I don't know if you guys are so excited, but this is it. So we can see clearly right here at this point the market was trending upwards. You can see market came, hit a resistance, pushed up from a lower low, a lower high, came here from a lower high, came from a higher high. Wait a minute, I think I made a mistake. So you can see that the market was trending up at this point. Came here from a higher high, lower high, higher high, lower high. And normally we should be expecting another higher high. But then we see this equal highs. Wow. That exactly is how to spot a trend reversal. I usually use chart patterns to spot them. I use head and shoulders. I use I use head and shoulders, and also use double tops, and then sometimes the wedge. But I'm just going to show you guys head and shoulders mostly. The same thing applies with double top mostly, because it also same thing that applies for the head and shoulders. But this is the double top. So you can see very clear here now that the market was trending upwards at this point since December 2023 up until July 2024. The market has been trending upwards for the euro, for the dollar, for the DXY. And then all of a sudden we get a boom. See that? See? We get a very nice head. I don't know how to keep saying head and shoulders. We get a very nice double top. This is double top. This thing can be seen as a trend reversal, a potential trend reversal. And as you can see, as it just did that, you can see how the market push right back down, just push right back down. All right. So Guys, you can see clearly it happening before our very eyes. So this is one of the ways to spot a trend reversal. All right. So we see this on the weekly. That's why I always sometimes at the end of the week I come to the weekly to see what's going on. At the end of the month I come to the monthly to see what's going on. So when this month ends now, I'll go to the monthly to see what kind of candle formed, how did it form, and stuff like that. Because I know that they work. All right. So now you can see this is exactly trend reversal. You can see this has been trading up. It's been going up, came down, came up, came down. We expect it to go up again. All of a sudden, then we get this boom, double top. Actually, I capitalized on this double top. I saw it and I capitalized on it. I made money from it. I saw it and like it was like, damn, this is juicy. So I capitalized on it. So remember, it closed. Then we wait for the pullback to the area of interest, and then before we shut the market. So this is one of the ways to spot a trend reversals. I wish I could see head and shoulders right now, but yeah, it is definitely will be one of the charts like that. But sorry, guys, it's definitely going to be one of the chart. But the problem is just going to be like time I have to start screwing right now. I should have done it probably before coming, but because I saw it mostly on the DXY, the DXY was very, very obvious, so I decided to use the double top. Damn, bro. Sorry, guys. So the DXY was quite very obvious. So I decided to show you guys on this one. Let me check gold. I think gold gave sometime XAU USD. I think gold gave sometime a good head and shoulders. Let me look at it if it's still it's going to fire back because I know I've analyzed gold sometime. Let me use the monthly first of all. Maybe the monthly is going to be very clean there. Okay, I think this is one of those imperfect this is one of those imperfect charts structures. So you can see, I know you guys can't really see it, but I can see it. It's actually due to experience. So boy, you can see this. Let me use the head and shoulders. You can see this left shoulder, right head, and then right shoulder. In the monthly, in the weekly, it's going to be much clearer for you guys. All right, and also kind of like give us a double bottom, then push right up. So you can see it here right now. The market has been trending down. Then all of a sudden you see this inverse head and shoulders showing you we are likely to push up. Thank God I saw this. I was teaching some group of my mentees and I was showing this to them. People like I'm teaching, just young guys that really want to learn. They're mostly high school, secondary school, whichever one you want to call it. And I was teaching them, and you can see it was a downtrending market. And all of a sudden, we saw this. Let me just put my level here. I like to use these levels. Good. Good. So you can see market broke it, pulled back, and then probably around here you just go open. On this is on the higher time frame. Lower time frame you're gonna see entries pattern, but we can spot the head and shoulders on the higher time frame, the monthly. Definitely I'll be on the weekly looking at it, but if I go to the weekly now, it's gonna be pushing me to go backwards, and which I don't want to go. But let's try that, shall we? Let's try that though. Let's try that. Okay. See, and it's kind of like a little bit wider. I can't really see. Can't really see. I don't know. You can't really see it. So I think let's remain on the monthly. Can't really see it because it's gonna look a little bit wider. So on the break of this, expect to the upside. So you can see, guys, very simple. This was a downtrend turning to an uptrend. So this is how to spot trend reversals. It's simple and short. Then you capitalize on them on the lower time frame. Now you guys might be wondering, what about on the lower time frame? How do you spot trend reversal on the lower time frame? I will tell you guys something. That's what I do. But just knowing that the higher time frame confluences are usually much more stronger. If I see it on the higher time frame, best believe I'm going all in. On the lower time frame, I just need to be much careful. All right, I just be not much careful. So let's say the market is on the 4 hour, the market is an uptrend, and let's say let me be trying this thing so I guess. Let's say on the 4 hour, the market is an uptrend, so you can see the market rallying up. All right, so we can see the market rallying up, and then on the lower time frame, like the 30 minute, we tend to see a double top. I can't a double top or a double bottom or a head and shoulders or inverse head and shoulders. I can't really start saying, oh, the market is going to change trend because of what is seen on the lower time frame. It's a taboo to prioritize conferences on the lower time frame than that of the higher time frame. So if I say that, definitely need you to hold, but best believe it's not going to hold for a long time. It's just going to hold for those scalpers probably to scalp here and then get out. If a scalper could have fine, you're just going to scalp their movement and get out. You get me? It's just like a step. If you're analyzing on the 4 hour, your entry is going to be on the like 15, 30 minutes. If you're analyzing on the weekly, your entry is going to be on like on the 4 hour and 1 hour. Yeah, for me, I used to bring it. I can bring it down. I found a way to bring it down to analyzing on the um from the top to the bottom. I take entries on the 30 and 50 minutes. All right, that's what I teach here. I analyze from the weekly and take my entries on the 30 to 50 minutes. It's simple, very simple, very easy. So that is it, guys. So on the lower time frame, they work, but do not prioritize if the 4 hour time frame is an uptrend because you saw a head and shoulders or a double top on or a double bottom, sorry, on the lower time frame like the 30 minute or 50 minute. You say, oh, it's a trend change. Now, even though you see that on the 4 hour, you can try to consider it. All right, because why? Because if you're taking your trades on the lower time frame, it might affect you. So let's say on the 4 hour you see an uptrend, right? So and then you see sorry a 4 hour it's an uptrend, then you see something like a double top. In that sense, it's showing like okay, the market probably be heading down. Now, because you're on the lower time frame, you should at least maybe pay attention to that a little bit because you're on the lower time frame because best believe it's going to pull back and maybe because you're on a 15 minutes, it's going to hit your stop loss. But on the 4 hour, it's just a pullback. I don't know if I'm confusing you guys. I hope you guys understand what I mean. And also, moreover, all these things are best worked are best applied when they are within an area of interest. So on that 4 hour, not because you see a double top anyway. All right. Anyway, because that 4 hour is under the daily and the weekly. But I hope I'm not confusing guys. That 4 hour is on the daily. So that 4 hour is under the daily and the weekly. So definitely it's going to probably be, it has to be at least in a 4 hour level for it to be applied usefully. It's going to best believe on the 4 hour level or on the daily level. Or yes, on the daily level. You get me? So that is it, guys. I hope I didn't confuse you guys there. Just know that chart patterns, trade reversals can also be used on the lower time frames, but do not prioritize the trend of the higher time frame down to that of the lower time frame. So if let's say you're on the 4 hour, the 4 hour is an uptrend because you see a head and shoulders or inverse head and shoulders on the lower time frame that probably maybe is showing a trend reversal. Doesn't mean that it's going to probably change the trend. It's probably going to just push up and come back and continue the overall trend of the 4 hour. So if you're doing that, you best know that you should be on the 5 minutes and the 1 minute to take a trade because it's going to probably go up just a little bit, but for you to scalp, but not for you to hold as a day trader or as a swing trader. Hope that explains it. So, thank you very much, guys, for staying up to this point. Damn, gold is really high at 2,722 per ounce. Really? Really? Wow, February 1st. So, thank you very much, guys, for listening. And thank you. And peace out on the next week. Thank you.